All right, welcome back to Dan's Trades. Appreciate you checking it out. Good afternoon, good evening, good morning, wherever and whenever you are. Quick reminder, this is purely for my personal journaling and review. I'll take a look at some trades I did today. Is February 13th, 2024. Had some scalps this morning, then some lunchtime activity we'll review, and then we'll take it from there. So we're going to test this out. I'll start this plan, and I'll probably zoom this in so it'll be a little bit easier to see. Focusing on the NQ here today. So today was CPI, so no trades this morning. So this big drop here is from the most recent inflation numbers. So the markets did not like that. So we're looking for a little contrarian trade coming back to high since we are still in a bullish market. Order flow should still be to the upside. So we're looking for a run back up. We're entering long here. 5-minute chart. Getting a few things dialed in. So we are long one position. Getting the stop set. I'm working on these bracket orders. I dislike that. This is what I don't like about the Top Step account is, or I should just say Trade-O-Vate, is not being able to use the market orders and then set your stops and your take profits off of it. Other brokers do let you. Trade-O-Vate just doesn't. It's one of those small things that shouldn't matter but does. I call it a little big thing. But here we see we're almost immediately in profit. Looking good. Thinking about, hey, if I want to do a tiny quick scalp, and this is part of why I review. So 100% transparency. I've already watched this once, obviously, before recording this. So me looking back, looking at this large down close candle, and then it's moved back up to it as an immediate rebalance. And in hindsight, a perfect scalp opportunity to just exit right there, even as this one closes in. So this upper one is a higher level fair value gaps. We see the 4-hour there. Short term buy side liquidity targeting. And we're already in 41 ticks of profit, so I'm just squeezing up. Then I started looking, like, okay, yeah, we might come back down. So me thinking about this after the fact, I should have, woulda. Hindsight's 2010 versus 2020. But I said just look back at this, knowing where the day ended. I can think that it would have been nice to just taking the trade off right there as we zoom in. I will zoom in again on this. So adjusting the stop here, not the stop, but just the idea of if this were a swing trade, that's where it may or may not come back down to. But just look at the R to R ratios there, and we see we're just about up to, so we hit 60 ticks in profit there at one point. Ultimately looking for it to make a run up to that level. And I want to see it move up. What I'd like to be able to do is move that sell limit order up to my target where the long tool is showing, and then be able to set my stop where the current sell limit is. That's my thought process, is if this trade will get some legs and I can let it run, that's where I'd like to let it run and breathe. This being a Top Step account, combine account, technically demo under the covers until you're funded, and it's an express funded account and or a live account with any broker. I do treat it differently mentally because I know that it's not live money under the hood. So mentally that does play into my trading, which it shouldn't, but human nature for me, it still does. So this is why I love going back over this and watching it, just so I can try and help my own personal self. So if you're new and you're starting this, highly recommend you do it yourself too, whether you can record it or not, or take notes, take screenshots if you don't have a screen recorder, whatever way that you can do it to review your own activity. And I will speed it up when it's less interesting. Hopefully it doesn't get too sick, because we see this is about 23-minute recording. Again, watching this on a 5-minute chart. Just as a basis, the whole layout is the middle four are NQ 15-minute chart above it, which I'm not even focused on. 15-minute chart to the left on the ES, and 5-minute directly to the left of the active box that I'm watching. So now we see we're getting up, so we're 60 ticks to the good, 64. Looking for a run up, just getting a feel for where we are. There's 70. So the trade's looking good. I just like to see it get some legs. The only thing I don't like at this point is we just finished the New York AM session. So this is my trade window, and this is why I would like to see it run up more. You can get a better view for so I'm initially targeting just below that swing high, which is when the news reports came out, right there. So the trade idea is for price to run back up to that to offset the trade. There's a view of the ES. And then YM's over on the far left. Dixie's up at the top left. Over on the right side are a couple commodities, oil and gold. I'm looking to trade more and more oil, because being a range-bound asset, it's very interesting in how it reacts and how it plays in price action. So on big news days like this one, CPI, I will be looking to trade CL more often. I'm testing more of that out. It's a good alternative outside of the NASDAQ and the S&P 500 and Q and ES that I typically trade. So again, our main focus is on this opposite active chart. Is the only thing I'm actually looking at. So now we're up 100 ticks. Here's me hindsight. I should just close it out. If I ever see triple digits, just collapse the trade and be happy, Dan. Be content with enough, as I like to say. Or as ICT likes to say, and I've taken it on. But my thought is, I'm trying to let trades run. Over on the left side, we see we're getting confirmation for potential longs on the ES, so that gives me more confidence of staying in longs on the NASDAQ. That's the only reason I didn't collapse it. Spoiler alert, yeah, it does come back. Well, let's just watch it and see it go here. Maybe I'll fast forward in a little bit. I'm seeing there's no gap there. Like to see it run up. There's nothing left in imbalance, but I don't think I've taken a look down at the lower time frames, which is going to tell a different story. So again, we're sitting up around 90 ticks up, right around 100. Hindsight once again. Collapse it. Take the trade off. Be done. One contract. No reason to have to hold out and wait for 400. But as I mentioned, that's just hindsight, because I already know the future here, but we'll just watch it play out here. And this is going to be an example of what not to do. Good example would be, so that's a 4-hour fair value gap. That price came up into, respected, filled it in all the way, closed back down. Now we're hitting it a second time, and it actually does react off of it. Price is going to come back down. So great exit target. I could have used that. That is a higher time frame PD array, being on the 4-hour. But price has already been up to it once and back down, so I would prefer just to leave in my direction, but it doesn't matter what I want. Alright, let's fast forward a little bit here. Coming back down. Here's where I dropped down to the lower time frame, which could have just here's where I'm looking. Okay, I was up 100 ticks, now I'm back down to 30, so I've lost 70% of my potential profits. That's why I look back at this hindsight and say, yep, just be happy with a super short-term scalp. But I'm working on getting better at holding a little bit longer, is what my thought is here. So maybe I am just a true scalper and I should just stick with that and be in and out and hold less. I'm considering it. Alright, here's the 3-minute view. So now I say, okay, yep, here's the reason price is returning back down. Here's the 1-minute chart. We definitely have a fair value gap. I debated on adding here and pyramiding in, since it is above. Would be a pretty great idea, actually. First buy was there, second buy could be above if we're expecting prices to go higher. We already saw one. So here's what you don't want to do is, you know, like, okay, it's probably going to fill in this fair value gap. Let's move my stop down so I don't get taken out. Even though the stop would have protected profits, shoulda, coulda, woulda. Just commenting, narrating. See, we see right there, I already took it out once, so it's already respected this once. So here's me knowing hindsight. Yeah, we've already hit consequent encroachment, and it drove it higher. We're probably going to come back down and fill it in now. Nice respect there. Just tick that below right there. Tiny volume imbalance that it's filling in right there. That's what I'm watching, just in between these two candles. So the market's filled in that volume imbalance. That's done. I'd like to see it turn around and go, but the market says I have to fill this inefficiency. Wants to put in sell side right here, so we need a down close candle painted over this, which is not in the direction of what I want to see. But so we do have 1, 2, 1 minute fair value gaps. Jump back over to the 3-minute chart. We see it's a little bit easier to see on a 3-minute. And in my brain, I'm preferring this. I would like it to be a breakaway gap and not fill, and just turn around and run now. That is my thought. That's the only reason that I'm staying in this trade. But I know I moved my stop too soon since I never made it, so I'm gonna probably move it back down, which is a mortal sin in trading. You shouldn't be moving your stop like that. But it comes down to the discipline. Because I know this is a combine, because I know this is not live funds, I do things I don't do in my live funds account, which just builds my own bad habits. So here we go. 13 ticks. We were at 100 ticks of profit before. Now we're down to 13. So what's the worst thing we could possibly do? Move the stop back down, right? Or do we just get stopped out? What are we thinking? Let's see. We dug down. Now we're in that fair value gap. And what time is it? It's a bad time to trade. We're in between the AM session and in between lunch. Stopped out. Alright, so I didn't move it. Stopped out in profit. One scalp. And what does price always do? Price always goes back in your direction, right? So mentally you're like, darn it. Let's quickly reevaluate. 3 minutes. Maybe I can get in lower. Get a better entry. You see some 1 minute fair value gaps that I noticed. You know, take a buy here, right on these as it fills in those inefficiencies. So take another shot at it. First shot was stopped out of profit, basically break even. So this is swing 2, based off a lower time frame. All right, we're filled. We'll get the stop on, set that below that swing low, get a limit on for where our target is, where we ultimately think price is going to go. And that is that tiny line you see there is a indicator that's showing, I forget off the top of my head if it's a new week opening gap or a new day opening gap. It's one of those two. just an indicator showing time where price has often been known to respect. And I'm also looking at the 4-hour lower fair value gap there and consequent encroachment, how it also respected it before. That's why the sell stop is right below that. But knowing this after the fact, I shouldn't even be entering a second trade because we are at the wrong time of day. It's 11 o'clock. This is no man's land. I should not be trading right now. So placing a second buy on potentially what I'm viewing as an order block. Right there. That's why I entered a second contract. Looking for a run back up, which it does respect it and moves back up, so I like to see that initial response. Adjusting, putting a second limit order in, which would be right at short-term buy-side liquidity. Now we're back in the positive, so I'm liking that. Zoom in a little bit. We'll manage it from a 1-minute basis. Let's move that to that previous swing high. That'd be a good target for a scalp. I am seeing there's a tiny another volume imbalance, so some volatility definitely in the market on days like CPI like this. Adjusting my long tool to match where the trade is, so I've got about a 20-point stop. Looking for a potential 100-point run, but so what are we looking at there? About almost 671 R to R. Not that I would hold it that long, but just that's the framework. I'm looking to get a scalp inside of it and taking a partial on the way up there, so now we have 2 contracts on. 23 ticks to the positive. 30. So my rules, I say rules as if I see myself actually using my rules, so I just want to measure what's the first one. So there's a 40-point run. That's still almost a 3-to-1 trade just for the first partial, so I'm perfectly fine with that. It's perfect for a scalp. 1 contract, 40 points. Yeah. Oh, and I was going to say my thought is move the stop above break even in the live account when I reach 75% of my path to the target is when I should be moving my stop. So yeah, we're looking at a 2.6 there. I like those. I like that reaction to the order block. I like how price came back down, filled in that volume imbalance. So we should be ready to run now. 30 ticks to the good. And this is swing number 2. Now we have 2 contracts on. There we go. So I moved a little bit. I wanted to take away some of the risk, moving that up below that most recent swing. Just to the left there. As price moves. I'd like to see it making higher highs now. 10 seconds left on this candle. That one did not make a higher high, but I'd like to see it. There we go. That's what we want to see. We want to see price start to run. And I'm quicker to move my stop because scalping on NQ on a CPI day, another volume imbalance, which I don't like seeing when I want it to run. I'd rather see it be efficient and just move higher. So there it did come back down, did a quick rebalance, sold a few there. Technically it should need to paint over it, so that is still an open volume imbalance. But at least we're taking another swing here. And I'd like to be done sooner, since I'm seeing, this is not a optimal time to be trading in between that lunch and morning again, so I'm moving the targets lower. Perfectly fine with it for scalps. Now we formed another tiny fair value gap in that 1 minute. Price is now starting to run again. I like it. We're at 75, 76, 80 ticks. Great profit. 84. The natural reaction is you want to chase it up, but that's what I'm trying to not do all the time. There's a fair value gap that potentially could be forming. I'm watching that. But price is moving quick. That 1 minute candle hasn't even finished yet, so it didn't even get a chance to become a inefficiency. Price is already painted back down over it. So I was anticipating a fair value gap there, but it did not happen. So there's that volume imbalance that prices want to come back down to already. The algorithm knows. Can't tell me it doesn't. Right there you see it happening. If you see it enough, you will believe it yourself. Isn't that what they say? Seeing is believing? Don't believe what people say, believe what you see. I'm watching it right there. It just happened. I'm expecting that actually to paint a down close candle over it and then run back up. If price continues down, then I'm wrong and I'm on the wrong side. So that's why the stops are to protect it. Tiny bit of profit. If it does go below, I'm holding my cursor there just to be support. That works, right? I wish. All right, next candle. It's amazing when you get to trading how slow time moves. A 1 minute candle seems like it takes forever to paint. But hey, I'd be perfectly fine if it just left that and came back to it later. See, there's another one now on that 1 minute. So we got tiny volume imbalances everywhere, which is showing me high volatility today. Massive wicks, which is the nature of major news days. Now I want to measure that wick. I want to see where the halfway point is of this wick, which is what we call consequent encroachment, or ICT calls it that. Make the line black so I can actually see it. It was white when I used to have a dark background. So I'll just change over my templates so I can see where the midpoint is there, 177.57. I want to see price get up to that and close above it for continued bullishness is what I'd like to see. And here we go. Let's see where we get. Price thought about moving up, did make a tiny little move there. Again, we're watching on a 1 minute chart here. 50 some ticks in profit. I want to see it past that 77.57.50. If it passes that, I'll move my stop. High volatility today. $20 more seconds. Made a higher high on the 1 minute, so that's good. And I'm thinking, okay, we got the volume imbalance. It still hasn't painted over it yet. Hasn't down close candle over it. So let's see if it does it right here. 3, 2, 1, 0. No, it did not yet. So price is going to come back down. It needs to paint over that and close over that volume imbalance like that, and then stay there. But 1 minute is a long time in a highly volatile market like this. Price isn't just going to stop us. So here we go. Just took out my stop because, all right, I'm off sides again. So 2 tiny scalps, basically break even. And where'd we end that? Since I don't watch the dollars yet, I'm just curious where the combine account is at. We're up 162. And I'm looking at that previous gap that's being respected. So I jump back in. With 1 contract. I'm trying to get in one more, look at those volume imbalances. I just know that price wants to fill those inefficiencies and then run. That's what I'm expecting. There's a potential down close candle. Got the stop at the same spot down at just below consequent encroachment of that previous 4-hour fair value gap. And it's also below that previous swing low on a 1 minute. Trades back up, 20 ticks again. I just left my same sell limits, perfectly fine. Now this is the 3rd trade. Scalping, protecting potential profits as fast as we see price moving today. Now I'm going to chase it up. Now I'm getting tired of watching the profits disappear, so this one I'm going to get aggressive. We're 40 ticks in, stop sitting there. Sell limits above. I want to see price running. I'm gonna aggressively trail my stop up, or I'm not. Boom, we're out. Okay. That was 3 scalps. Switch back over to a 5-minute chart. I think I'm gonna just look at it and be like, all right, I just took 3 trades. Price doesn't want to run. I'm at 257. Might as well call it quits. I mean, I'm expecting higher prices, but sometimes you don't get what you don't get. And I should be happy with small profits on a scalp day like that. So my initial thought here is, and this is where we're going to switch up the video a little bit because we're almost to the end of this recording. And 3 scalps, I can be done for the day. CPI day, crazy things happen. Where did we actually end up though? Let's show that. I think I did already show it, but yeah, we're up to 250 or whatever, so we're done there. All right, now we're back on my chart, not watching the video. Here's a view of those scalps. We see, here's my first entry, exit, 1 point above, the tiny break even. Hindsight, I should have exited here. Added on, or second trade, added on to the second trade, closed out. Re-entered, closed out. That's what we just watched. So 1, 2, 3 scalps. Should have been done. Coulda, shoulda, woulda. Now this is going to be an example of what not to do and why I'm not going to continue to trade a combine account anymore, because I had the bad idea of watching other things and I still had my up bias. But for some reason I thought maybe I could get into it on the macro times instead of, so we see this is a 1050 to 1110 macro. Right in the middle of it is the upside. So we know these macros run at the top of the hour. I had the idea of getting in the macro for the 1150 to see if maybe that's when price was going to get my highs, so I entered another trade. Let's just bring it over and show you the craziness, because this is what you don't want to do. This is why in my live account I don't agree with people that think that you can DCA or dollar cost average into futures contracts just because it's volatile, or retracements will save you. Because this is an example of blowing up an account. This is what you'll do if you don't have discipline. And I don't have discipline trading the Combine account because I know it's not real funds. Yes, you should, but just because you should doesn't mean you do. So Dan, this is you looking at why you're not going to trade Combines anymore. Because I was hoping this would respect it one more time and then turn around just like we saw in the video. But I made bad decisions and I kept buying along the way here. I said it's going to reverse, right? We're going to bounce off this. So I bought again. Maybe we'll bounce off the bottom. Here's the buy at the bottom of this 4 over here. Really got. Let's bring this over. Buy, 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 buy right at the bottom. Did get a nice repeat, but here's the problem. I was one. Let me make sure here. So first entry. There's my first mistake, as I entered after my PM set or AM session was even done. Should have taken profits when I had it. Should have, could have, would have. So one, first trade, second trade, third trade. So here's my next entry. I'm well past no man's land. I should never be entering here, but it's a Combine, so I broke rules. I don't break these rules in my live funds accounts. So one entry, quick stop out. So this is what I should have done. I was hoping price would respect this. Price broke it, so I had my stop right there. You see the stop out was right there. I should have walked away. Did I? Nope. I said I'm smarter than you, Mr. Market. I'm going to get back in. Mr. Market said, no, you're not. I'm going to drive price down here. I said, oh, you just want to come down here to get more. It's taking out this swing low, right? Taking out some liquidity. Just happens to line up. Buy another one on the way down. Nope. Market still wants to come down. Buy another one. So now I'm 1, 2, 3 contracts in. What that does is that changes the position up here. And when I'm not focused, I missed that. So what I did is I had these 3 on. I went to add on a 4th contract, and I mistakenly added 3 more. So now I had 6 contracts on, and I didn't even know it until I was down here and I went to put on, and I had like 4 orders above. I happened to look, I'm like, why am I 6 contracts on this position? And it was like even right here. When I put on the 4th one, I thought was the 4th, and suddenly I'm even. I'm like, how am I even already? I'm like, oh shit, I'm on 6 contracts. Should have closed it. Should have, could have, would have, didn't. Price went against me again. I saw it come down into this new day opening gap. Let me see, is it yeah, it's a new day opening gap indicator. I'm already deep, and I'm already like, you know what? At this point, I'm tired of trading this Combine, and I just said, you know what? It's all or nothing. It's not the right way. I don't trade my live funds that way, but I just said, you know what? F it. Let's go. 1, 2, 3. I'm already 6 deep. I might as well make it 7. 7's a good number, right? So I bought one more right at the middle of that. I had a chance to get out here slightly in profit. I think I was actually slightly in profit right here because I added 3 more, or 1 more, excuse me. So I had a total of 7 contracts. And with 7 contracts and you move at 10 points, that's a shit ton of money. I don't care who you are. And could have got out, but I was stubborn, not playing by the rules, and got my wish. Hit daily loss limit, Combine account is closed, and I'm done trading a Combine. I'm done trading challenges. I'm only trading my personal accounts. Like I thought I wanted to do, you know, multiple accounts, have one for funding, have trade my own that I'm much better in. And no, I only want 1 account. So that's what I'm doing now. So this Top Step Challenge funded account is gone. And of course, here's the part that will always bite you. You think they're watching you, right? Buy, 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 buy. I'm almost in profit. I buy 1 more. I'm in profit. Nope. Then I get taken out rightly taken out. Don't get me wrong. I should never be in this in the first place, and I know better. But I don't have the discipline, like I mentioned, in the combine. And if you're actually here and you're listening, so I appreciate it. This is just me talking through my bullshit and getting myself better. So my hard rules for my live funds account is I don't add on the positions that are below my first position unless there is a ultra A plus highly probable setup that price should respect below it, as in like 3 PD arrays together. But other than that, I don't allow myself anymore, my live funds accounts, to add below my first position. I can only pyramid on price above as price is moving in my favor. I only add to winners and I don't add to losers. That's one of my hard and fast rules on my live account. I didn't play by the rules in this combine because, like I mentioned multiple times, I don't treat it right. So here's what you think though. Because as soon as I was stopped out, price runs, right? Well, it doesn't run very far, but it sure as shit ran far enough that I would have been thousands in profit here on 7 contracts. But there's no way I survived this in the combine, and guess what? Look at where price is now. Oh, that would have been really bad, huh? So that's a great reason why you should not trade news days unless you are highly experienced and you actually use discipline. I failed to use discipline in this combine account, and this is the last video I'm doing of me trading the combine account because I'm 100% done with combine accounts. I don't care what broker it is. TopStep's great. I found ICT through TopStep. I had heard of him before that, but I didn't know anything until I did further research. And that has ultimately grown my other accounts, which is going to be what I record and put up on the channel in the future. So this is the final challenge final challenge video. If you do use TopStep, it's great for practicing, but you need to have the same discipline as you have in a real account, which is very hard to do, but it's what you need to do if you wanted to treat it like real money. So if you made it this far, I appreciate it. Throw me a comment, I'll review it. I do hold all the comments because people put in too much shit and spam in the comments, so I review them. So if anything good, throw it in there. If not, look for the next ones, and they're going to be real personal accounts, whether it might be tape reading, it might be live funds. We'll see. As always, not financial advice, purely entertainment and educational purposes only. And on a side note, it'll probably be next week until my first one because I'm going on vacation. Remember, tomorrow is not promised for any of us. God willing, we will see it, but make sure you live today. Appreciate you guys. Have a great day.